Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Thursday, August 26, 2021. We're just after 5:35 p.m. Central Time. So, interesting day, tragic day. We lost 12 soldiers so far. Don't know how many were hurt. I don't know how many civilians were killed. Two big blasts in Kabul that certainly we were targeted, and then at the Barron Hotel they went after more people. We're just not getting an awful lot of information. As the president said, it's a sad day, but he's going after his mission to get everybody out, and he thinks they'll be very good. They may not get everybody, but they're trying. I'm wondering about all those people that are circling the airport. Are they not getting out, I guess? I mean, I guess that's what the U.S. is saying. They don't get out. But we know that the Taliban's also not letting people that worked with the U.S. that they know about go to the airport either. And from what I understand, there's still 1,000 American citizens in there. I don't know how many want to stay. There's extended families. I get that over a 20-year battle that people have moved there and they have new lives. But there's a lot that don't have that. Terrible situation. The market broke on that news today in the afternoon. It doesn't do you any good with the headlines going 3 soldiers killed, 4 soldiers killed. This is just how it was going. All of a sudden it was 10, then 11, then 12. I was watching it, so very attuned to what was going on there. Tomorrow morning we get a keynote speech from Fed Chair Powell at the Kansas City Symposium. It's virtual this year, and we'll see what he says. It will be the market moving event of the day, and then after that it could be Kabul, or in front of it could be Kabul, and then he comes on. You don't know what's going to happen because the ISIS, they're attacking now. They're getting emboldened and that they're let loose, and that's what's going on at this point. But when we take a look at a company like ARK, I was looking for, will the market start filling any of these gaps? And lo and behold, what did I say yesterday? I said you generally fill these gaps. Market went higher, right back down, so there's no longer that island bottom. That's the first thing. Second, you now have a pattern of a lower low and a higher high. That isn't a trend. The third thing, the market's really stuck at the 18-day average of closes. Next support under the market, 118.23. Now, should this market tomorrow take out today's high, which was 122.34, that would spring what I call a bear trap. Bearish because you have an outside day down, and you'd put in the play getting back to that 200-day average of close. That can happen tomorrow or Monday. It's a 2-day event. Market still right now looks to me like the 118.23, and the Bollinger Bands are not in play. They're very far away from the market. It's moving averages that are in play at this point. When you look at momentum, that upswing stalled. The market's now going into a stall, right where it should, fighting that 18-day average of closes. In Apple, need I tell you, you get up to the upper Bollinger Band, you've been falling back. I've mentioned that this market keeps finding support at the 18-day average. It's been lifting towards the Bollinger Bands, not towards the lower one. Now, with this close today, it's actually turned bearish. You have a pattern of lower highs, lower lows. The settlement at 147.54 is under that 147.82 level, which is the 18-day average of closes. If the market wants to drop, next support's 144.62. That's all I can say about it. PAVE, I think everything today took a break, and PAVE being one of those. It makes sense. I mean, the market's not going to get another boost for it until Congress comes back sometimes in September to discuss this program. I don't think it's going back to the upper Bollinger Band. And it's not in a trend. You have a lower low, higher high. I don't see anything there. XLI, the pattern is lower highs, lower lows, bearish, but you're over the 18-day average, so the bias is up. When you get that, they're fighting each other. You have nothing. XSD, this is the semiconductor. Lower low, higher high, outside day up today. Overbought as can be. If the market can go higher, 201.49, a sign it wants to pull back, to me at least, to back to the 18-day average. Will be taking out today's low. When you have an outside day up and you take out the low of that within the next day or the day after that, which is 197.11, then I'd look for a fast move to that 18-day average of closes. You could be all over the board tomorrow with the Fed chair. If he says something surprising, I don't think he's going to. PODX, lower highs, lower lows, still breaking down right through here. Here's something new I'm following. This is XHB, the S&P Home Builders ETF. I think we can start watching this. You know, I was watching today, I think it was from Toll Brothers, one of the key men there, and he was being interviewed, and they were talking about the price of lumber. I believe it was on Bloomberg, and they said, well, look at this, has dropped $1,700. He said, yeah. He said, but that doesn't lower the price of the house. I'm sitting there going, what do you mean it doesn't lower the price of the house? That just increases the profit margin for the builder, because the builder's going to sell to the market values what's going to move that house. A fascinating way to look at it. I never thought about it that way. And he's right. That is the cost associated for the builder. His profit margin's going up because lumber prices are down. It gives him some pricing power also in the marketplace. Very interesting. When all his costs are up, it doesn't have a lot of pricing power unless he wants to sell at a loss. Here he can do whatever he wants, higher and lower, depends on the market. Fascinating to listen to these break guys. Higher high, lower low, going sideways, stuck for 3 days at the 18-day average of closes, emerging markets. Get over 80.49 and that'll surprise the market. That'll put the market back into a short-term uptrend. But in the meantime, the pros are going to sell this short at 80.35, risking, I think, that 15 cents or whatever, seeing if they can get the market down into that zone. Why? The trend is down. The bias has now flattened itself out and turning down, and you've got the momentum down. In GLD, I'm not friendly, you know that. I think that the gold's got problems. With a war scenario today, didn't budge. So the market up 19 cents, the futures didn't do well. You've got all these moving averages. I do see, as a chartist, the trend is up, but it's also overbought. It's got to embed in order to get me excited. In the gold miners, lower highs, lower lows, correcting an oversold condition. Now, typically, when you have an embedded reading and you lose it, you make a run to the 18-day average of closes. Telling me that's not going to happen, has to go back to where you lose the embedded reading, the lowest low of that. We'll see. So behind the scenes, if you will, I still have that bullishness because of that. And if you go back and you study it, I think you'll be impressed with what that does. TLT has stepped out of its uptrend. It did that yesterday. Now the market's just sort of drifting along here, which makes total sense. Who wants a big position in front of tomorrow's keynote speech with the Fed chair? And then we have other, we're not the only people speaking at this. There'll be other central bankers around here, our own people talking. We're hearing from everybody. And then we saw today in Asia, the Bank of Korea raised its rate 1/4 point. So they're the first major Asian bank to start raising rates. They did that today, right in front of this meeting. FXE. Resistance, as I've said, the 18-day average. You've got the trend up on the swing line, the bias down because you're staying under that 18-day average, and momentum has spent a lot of energy here and it's sort of flattening out. I think you've got to wait and see what tomorrow's going to offer. And during the day, if you watch, you're seeing these swings up and down. One of the ways you can follow them and what's going on is using this indicator called a pivot point. It has been around a long time. It's very popular. Day traders and swing traders will look at it on a daily basis often. Didn't say everybody, but a lot of us do. When I'm looking at my entry and exit points that I'm putting out recommendations for my clients, and I'm not a day trader for them, But I'll look at this. Gee, where's that look like on the chart as intraday? Are we going to make it there? So I teach you in a video series how to use it, how to tie momentum to it, what they use it for, and what to expect with it. Doesn't mean it always works. Nothing does. But if you learn these, you get an edge on the market, I think. Go to our website under free offers. It's all there for you. I'm Ira Epstein. Going to be an interesting day going into the weekend. I'll see you tomorrow.